Hey, what's up everybody? Here's a real estate investing hack that I will not gatekeep from you as a real estate investor that manages over 300 million in assets. I've sold over 7,000 houses and I've got hundreds of real estate properties I own myself. First, a question that I would ask you is at what age would you want to stop working and just live off of passive investments? Because real estate is a very easy way for you to get to a point where you can live passively off your real estate investments. So let's just say you want to stop working by the age of 50 and your expenses are around $11,000 a month. So let's just say to get there, you would have to own about 16 properties renting at about $1,500 a month. And I'm saying 16 at about $1,500 a month, completely paid off, to net you that 11,000 because you're gonna have some expenses. Now, that is saying that right now, today, the properties rent at 1,500. But more than likely, those properties are gonna double. So it's probably more like 10. So if you've got 10 properties paid off, minus your expenses, later on in life when the rent doubles to say $3,000 a month, you're definitely gonna clear $11,000 a month. The other thing that you have to think about is, let's just say that average property is say 300,000 that you buy for today, it's probably gonna double to about $600,000. So let's just say that if you had 10-ish properties, you invested $3 million, and most of that you did leveraging debt, and then you wake up one day and all those assets are paid off, you've got a $6 million asset. That's one of the great things about owning real estate. So let me talk to you about how you do this. A lot of people think this is not possible, but it's a lot easier than you actually think. First and foremost, what you have to understand is financially, you've got to be bankable. Now, what this basically means is for a bank to lend you money or a lender to lend you money, you got to have good credit. So if you are going to want to build a real estate portfolio or do anything in life, you need to have good credit. So you need to understand credit. You need to aim to pay your bills on time all the time. If you don't have credit, you need to get into a situation where you get credit cards, you start building credit. And if you right now, today, if you know you have collections or anything on your credit and you want to get into investing in real estate, you need to get all that cleaned up. Because if cash flow and cash is king when it comes to real estate, credit is the queen. You have got to understand, for any lenders to lend you money, you've got to understand your credit picture, you have to consistently maintain it, and you have to consistently maintain good credit. And as your credit gets better, you become more bankable and it's easier for a lender to lend money to you. Now, if you want to be a long-term real estate investor, most lenders are going to want to see that you have consistent income. So 2 years of completed tax returns. This is not always the case if you get a DSCR loan. However, it's super important that if you're going to build a real estate portfolio, you have multiple options of where you can borrow from. So it's super, super important that you have at least 2 years of provable income for a lender to give you a loan. So one of the other ways that you could get a real estate portfolio and a rental portfolio fairly easily is the BRRRR method. And that's buy, renovate, rent, refinance, repeat. And I'm gonna break down each step for you. But one of the things that you can do is, if you don't have a ton of money for a down payment, is you can go to a local private money lender. You're gonna pay higher in interest, and that's okay, because let me explain to you how this could work. So what happens is you go out and you find a property that's under market value. Maybe it's a property in foreclosure, it's an estate, it's a property that needs renovations. Now the key to this is you gotta buy a property where you're gonna be able to get solid rent. There's history in that neighborhood of appreciation. It's somewhere that people wanna live, because location, location, location is everything when you buy a piece of real estate. So you've gotta research the market, you gotta understand what's going on with the market. And if you're not super familiar with this, get a real estate agent who understands the investment side of real estate to help you find the property in that area that makes sense. So the first thing you're gonna do is you're gonna find a property that you're gonna buy under market value. Then you're gonna renovate that property. And what you have to do is you gotta buy the property right, where you renovate it, and then the after repair value is worth enough that you could go refinance this property and get out of the property, pay off your lender, your private lender 100%, and be in the deal for little to no money. That's what the BRRRR strategy is. So you renovate it, you do the renovations to the property so that it increases the market value. Once you do that, you rent the property. You've got to stabilize the property, because no bank or DSCR lender is going to lend to you without strong rental income or be able to prove that you can get the income. And one of the things that's super, super important that you have to understand when it comes to this is, I say this all the time, but you need to live by the 1% rule. What that means is, let's just say the after repair value of the property is $200,000. It needs to rent for $2,000 a month at least. Now, for a lender to lend you the money, whether it's a DSCR, whether it's a bank, it doesn't matter. What has to happen is you need to have a 1-to-1 or a 1-to-2 ratio. That means that with all of your expenses in the property, your taxes, your insurance, your rent payment, your property management, that the rent has to have a 1-to-1, 1-to-2 ratio coverage above all those fees. If not, a bank's not going to loan it to you. So it's super, super important you understand that. For instance, if you could rent a property, if all of those expenses are $1,000 and your rent is $1,500, then you're going to be well above that coverage. But if all of your expenses are $1,000 and your rent's only $1,050, then a lender's more than likely not going to loan because that doesn't cover the ratio. And you should never buy a property that doesn't cash flow and doesn't meet that ratio. So that's the rent, right? So we've bought the property, we've renovated it, we've now stabilized it with a renter, and then what we're gonna do is we're gonna go to a DSCR lender or a bank and we're gonna refinance. Now, what happens is, because you bought the property undervalued, you put the sweat equity into it and you renovated it, you stabilize it as a rental, the property should appraise for much higher than you have in it. And if it appraises for much higher than you have in it, you should be able to refinance 100% of your costs back out, or even have a little bit of money left over. So what this means is, let's just say that you borrowed $150,000 from a private lender in order to do this deal. And when you got done, the property was worth $220,000. When you go to a traditional bank or to DSCR financing, one of two things are going to happen. They are going to lend you based on your cost, so they give you the $150,000 back, or they're going to lend you based on appraised value. Well, if they lend you based on appraised value, you've got $150,000 in the property, it appraises now for $220,000, you have a ton of equity, right? So they may even loan you $160,000 or $170,000, but they're definitely gonna give you $150,000 more than likely, because your equity in the property is so high. It's way less of a risk for them. Now, you don't wanna take on more debt than it makes sense to mess up your cash flow. But you can do this situation where you can get private money, buy the property, renovate the property, rent it and refinance, get your private money lender out, and own the property with no money out of your pocket. This is why so many investors, including myself, build huge portfolios doing it this way, because you have little to no money down in the property and you can end up building a massive portfolio this way, and then you just consistently repeat it. So after you refinance that one, you go do this again, and you go do this again, and you go do this again. And if you think about this, if you only buy a couple of properties a year, getting to that 10 to 15 is not unattainable, and you can get there pretty quick. So step 3, another way that you could build your portfolio rather fast, is using what's called DSCR loans. So that is called a debt service coverage ratio. And I just talked about that a little bit a few minutes ago. But the cool thing about that is, why that's exciting is, a traditional bank is gonna make you go through all kinds of things financially. Look at your tax returns, look at your bank statements, go through all this. A DSCR, they're gonna look at the property, right? And they're going to look at the rent, and they're gonna base it on, does the property perform or not? Like we talked about earlier, the cash flow strategy of the 1-to-1 or the 1-to-2. So the thing that's cool about this is, a lot of DSCR lenders will allow you to have leverage, either 20% or 10% down. If you're listening to this and you're like, man, I don't have the 20 or 10% down, then you could go back to the BRRRR method and try it that way. Or you could do something else where you could partner with 1 or 2 people, to help you with the down payment, so that you could get into the property and have a rental property, and you don't have to come up with a down payment, and then you just work out some type of joint venture agreement, potentially with that investor. But the DSCR loan program, which is fairly new, most people aren't even aware of this, and aren't even aware that this exists. And it's so much easier of a loan process, and it's so much easier for most people to qualify. And the more that you do it, and as you build your portfolio, it becomes a lot easier. The other thing that's great about a DSCR program is that they usually do the amortization over 30 years, which helps you get better cash flow. So if you think about it, you can get in with low leverage, and you can get better cash flow. Obviously, it still has to make sense. It's still got to meet that 1% rule, and it still has to meet the lender's 1-to-1 or 1-to-2 ratio. But using DSCR as a strategy is another way that you can get to building a portfolio pretty fast. So step 4, one of the things that will help you get to owning these properties and paying them off faster, in my opinion, is concentrate on one thing. So I would suggest for most people, the easiest barrier of entry when it comes to real estate is single family home investments. Now, getting to owning 16 single family home investments is a lot easier than you think, as we already mentioned, when you follow some of the steps that we lay out and some of the other things that we're going to teach you. However, the one mistake I think I see people make all the time is they get into real estate and they try to do 100 things. As you learn more and you get better at it, there's certainly nothing wrong with diversifying your portfolio and investing into other asset classes. However, what I would tell you is it's super smart to stick to one thing and learn it and then move on to the next thing or the next thing. The other thing too, if you're watching this and all this sounds scary, and it shouldn't scare you because it's a lot easier than you think, but you want to earn passive income, but you don't want all the risk or the headache or doing all this work, then what you could do is you could reach out to somebody like me. We have several real estate funds and several different ways that we can invest your money where you can passively invest with us. We'll put your money to work and you have nothing to worry about. However, I do suggest you should go out and own some actual real estate and build a portfolio because of all the positive things that owning real estate will do for you. So step 5, we've talked about how to invest, what to invest in, and kind of how to put it all together. Step 5, let me talk about how you can pay debt down faster to get these properties completely paid off. So one of the things that I do is I take the excess cash flow off of all my rental properties, or I have other ways that I make income, my real estate business and different things that I do. And what I do is I take excess cash and I pay my debt down. See, the great thing is about paying debt down when it's on compounded interest, the more debt that you pay down, the faster you're going to be able to pay that mortgage off. So one thing that I suggest is what we like to call the snowball method, which is where I'll just pick one property and I'll pay extra on that property as much as I can, 1 or 2 extra payments a year. And I've done this several times, and what that helped me do is over time, I was able to start paying my rental properties down significantly, and to the point now where I've had a bunch of rental properties for a while where I've actually paid some off. Now, the other thing that you can do is as your rental portfolio grows, as I mentioned, if you just make an extra 1 or 2 payments every single year, it's going to substantially pay down that debt a lot faster, where let's just say you're on a 30-year mortgage, you pay an extra couple of payments every year. Now that mortgage compounds and now you can pay it off in 20 years. And then that's how it kind of snowballs. So you can keep paying extra debt off, and then those properties can definitely pay down a lot faster. So that's one of the ways you can get to a point where you can pay these debts off. And here's the cool thing, if you think about it, every single month that it's rented, you're not paying it off, the tenant is. So any extra cash that you have, obviously you gotta be financially smart about doing this, that you don't put yourself in a bad spot, because real estate is kind of a liquid, is anytime that you have the ability to pay extra on any of those properties, it's only gonna benefit you because the property's gonna go up in value, your rent's gonna go up in value, and one day they're gonna be paid off. And the faster you can pay them off, the better leverage you have, where you could do things like pull mortgages out of those properties and go buy other properties with that. So that's one easy way for you to get to paying properties down a lot faster. So the whole point of this too, as you start to build this and scale this, is you want this to be passive. So if you want this to be passive, one of the things that you need to figure out and learn about is handing this over to a property management company, because the last thing you want is, as you start to build this portfolio, you start to build equity, you start to build cash flow, you've now created another job for yourself. And property management takes a lot of time. I own a huge property management company, so I know. So one of the things you have to think about is, as you scale, you want to hire a property manager to handle the properties for you. And obviously you need to research and hire a good one in your market that really understands what they're doing. And I would interview several. I wouldn't just talk to one and hire them. But scaling with property management is going to be key to your success, because if you ultimately want it to be passive, then you're going to have to hand it off to somebody else. So you're not dealing with the day-to-day because it is a business and someone needs to run that business for you for it truly to be passive. So these steps that we laid out for you all seem very simple and basic, but really it is not as difficult as what people make it out to be. If you can essentially, real estate is the long game. If you think about the house that you grew up in as a kid and think about what that house is worth now and how much that grew in equity, then you understand the power of real estate. And think about if you get 10 or 16 houses and by the end of it, all those houses are paid off, your equity is doubled, your rent is doubled, and that's being conservative, that can completely change your life. Because you can have an asset that's in the millions that's paying you cash flow every single month, and you can have someone else manage it for you. The biggest misconception when it becomes to real estate is people think it's too hard, you need too much money, it's too difficult, and that couldn't be further from the truth. You just have to start, and you just have to start the process. Real estate, in my opinion, is one of the easiest and best ways for you to get the financial freedom. You don't have to have a college education. You don't have to come from money. Hell, you don't have to have a high school education. All you have to do is get some basic education on how real estate works, talk to people like me, pay attention, get mentors, network, get in areas where people are doing real estate deals in your market, learn from them, or hook up with real estate agents in your market that understand the investment side. And all you got to do is start doing this one property at a time. Even if you don't get to 10 properties, 5 properties compounded over time, if you hold them and they double and their rent doubles, will change your life financially forever. This is one of the easiest ways and best ways, in my opinion, to get the financial freedom. So in conclusion, I just want you guys to understand, you just got to go into action and don't think this is not possible or achievable, because I did it. I don't come from money. I don't have a college education. And hell, when I first started, no one even helped me. I had to go figure all this stuff out on my own. So if you want to learn more about investing in real estate, follow me and watch a couple more of these videos, and we're going to break down more things we talked about in this segment. So obviously, we can teach you so much more on investing in real estate. So if you want to find more out about subjects we mentioned here and more ways to invest in real estate, I want you to click here on the screen and watch the next video.